So you mentioned exits. What is your outlook on exits?
Well, again, every industry is different. So I run a retail consumer group, and a retail consumer, the typical exits are either selling to a strategic private equity fund, another private equity fund, or selling in the public markets. More often it's public markets because you can get a high multiple for a real good growth retailer, as we did in the case of Vitamin Shoppe and some of our other companies. But I'm viewing the IPO market still being open, cautiously. So I think for our retail consumer companies, we can still access the public markets. I think there are, for smaller retail consumer companies, there are opportunities to find the right strategics.
Going into 2012, what are some of the biggest trends that you're seeing for private equity?
It's kind of what I said earlier. I think the trends that you're seeing is specialization and optimization. So you're seeing a lot of operating partners being added to private equity firms, narrowing the focus. And one of the other things you're seeing more of, and we're doing some of it as well, is platforming. And what I mean by that is that you buy a company like in the packaging space that has a certain angle in packaging. Maybe it's bottles, maybe it's caps, maybe it's paperboard, and you build a platform around it, meaning you're buying other companies doing different pieces of the packaging silo. And there's a lot of synergies across that. So you're almost a quasi-strategic, and you're bringing value to it. So you can leverage the purchase price because of the synergies you can bring to it, and you can also create a lot of value by helping them with commodity costs and many other things. So I think other firms are doing that. I think that it's another way of creating value.